Okay, folks, let's go ahead and get going here today in our workshop. It's really great to do these with Investor Expo. Looking forward to spending the time with you here. And I think I've got some things that will really be insightful for you. I think obviously one of the biggest problems that we all have is getting in and out of positions at the right time. And there are thousands of ways we have explored to do this. And I think this may be something that you've maybe never seen before. So I'm really excited to get into this with you. I'd like to kick this off. Everybody should have, if you can, find the chat for me. Let me know that you hear me loud and clear. I want to start this off with some trivia. Okay, so everybody get ready. Let me know that you're ready. Let's say go in the chat if you are ready. The first person to answer this trivia. If you've seen this before, don't respond for me, okay? But for those of you that have not participated in my workshops before, this is for you. Those that have, you keep quiet, okay? Let them figure this out, okay? So for the first person that gets this trivia correct, we're gonna send you $100 and an Amazon gift card. Just contact myself at nick@thesupertrader.com, and our team will get that out to you right away. So you ready? Everybody say go. Mark said go. Everybody find Trader said go. Find the chat right now and let me know. You guys all ready? Okay, go, 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 go. We've got people in the question and answer area and the chat area, but I'm seeing tons of them. Okay, here we go. Who is this? Who is this? I'm going to give you some clues. And it's not me, okay? This is me, not me, okay? So 8 years after starting a hedge fund from my dorm room, I had lost tens of millions of dollars and went totally broke. Who is this? Anybody got it? No, not Peter Thiel. Not Peter Thiel. I'm going to give a couple seconds here. 5, 4, 3, 2, 1. Nobody? Okay. You want another clue? 8 years after starting my hedge fund, I'd lost tens of millions of dollars. Mr. Ed? Nope. Here we go. I had lost so much money, I couldn't afford to make ends meet. I even had to borrow $4,000 from my dad until I could sell our second car. Warren Ackerman? No. No. Warren Buffett? Good guesses here. Okay, Naomi, go ahead and find the chat there. You could just automatically respond in there. I think you raised your hand, but to go ahead and just find the chat and respond. Nobody? Who is this? I want to give away this $100. Nobody knows? Okay, going, gone. Jeff Bezos? Nope. It kind of looks like a young Jeff Bezos, doesn't it? This is, anybody know him? How about now? Yeah, the pick was from 1980. This was from when all this happened. Okay. Trader Ray Dalio. Ding, 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 ding. Okay, so all I see is your name is Trader. So Trader, go ahead and send an email to that email that I put in the chat there, and we'll get you over that Amazon gift card. I want to start this way because I know this is an advanced workshop. Most of us, most of you here have quite a bit of prior experience, and so because of that, you may have had some setbacks of your own. And I just love starting this way because although Ray Dalio is a little bit difficult to connect with now, just relate to, that is, his story is very relatable, and I like starting this way because just because you have struggled and have had setbacks and have put in a significant amount of effort, that's really the cost of admission, and not many people pay that cost and get past that hump before they give up. I just want to tell you a little bit about what Ray went on to do after this major setback, after losing tens of millions of dollars his first couple of years in, going totally broke. He ended up growing this hedge fund to the largest hedge fund in the world, with over $160 billion under management, and the most profitable hedge fund in the world. Okay, this is an individual that had some insane setbacks in the beginning of his career, and regardless of where you're at and how long you've been doing this, I mean, you just break this down and just consider the size. We throw the word trillion around nowadays in political spheres in our government like it's nothing, but 1/10 of 1%, 0.001 of 160 is 160 million. I'll just take that, a cool 160 million. This is huge. And you know, as you look at this fund, it's a really neat story, and you should study it. There are really great lessons to learn from those that have made it. I've got a lot of respect for people that have struggled. Somebody that comes on and hasn't paid that price of struggle and overcome that, I question their sincerity and the reality of the truth that they're talking about. It's really not easy to make it in the market, folks. And you know, you look at Ray's story. You know, he ended up predicting that there was going to be a depression in 1982, and he shorted the market. He said that he was dead wrong, and the stock market began a big bull run. And over the next 18 years, the US economy enjoyed the greatest non-inflationary growth period in its history. He said, my experience over the period was like a series of blows to the head with a baseball bat. How many of you have ever felt like that in the market? Say I. How many of you have ever felt like, well, that's just, man, maybe I'll choose the bat sometimes. Okay, say I. Yep. Okay, being so wrong and so publicly wrong was incredibly humbling and cost me just about everything I had built at Bridgewater. So as you consider where you're at, I think that it's really excellent to start this way. And that's kind of the spirit that I want to begin with, that throughout the next hour that we spend together, I want to walk away. I hope that you walk away from this recognizing that the struggles that you've had up to this point today is what brought you to just one more workshop. And maybe there's something in this, and I hope that I can give you something that can really have you look back and say, because of my struggles and because I showed up to that one additional workshop, whether it's this one or another one, doesn't really matter, that I finally figured this out. Okay. So my goal today is to talk about one thing. There's lots of issues that we all face. And you've got your inbox full of issues that everybody wants to teach you how to fix. I want to talk to you about one problem that you have, that we have, that I believe is the number one problem that we should be focused on, and everything else falls into place. Don't have enough money in your portfolio, this will fix it. Okay. Every problem we can identify, we're going to talk about entering and exiting positions at the right time. And I want to talk to you today about the fastest, most reliable way that I've found to do that. Okay. So I want to tell you a little backstory. Years ago, you know, in early years, about 10 years ago or so, I started following and had learned from several at Goldman Sachs and JP Morgan, and so was participated on their floors. I started reading these things when these big investment banks would have their investor days, and I remember I had this major epiphany one day when looking at the investor day package that JP Morgan Chase, one of the largest banks in the entire world, on page 12 of this report, something just blew my mind. Okay, JP Morgan Chase, obviously, a lot of people know them as a bank, but they participate in a conglomerate of business activities. One of those is trading. Okay, the financial markets. And I just want you to look at this and see if you can maybe catch on to the. I sat here and I read this and I looked at this. Here, we're looking at a 5-year period of time here of their performance in their trading business. Now, note here we've got how many losing days. This is how many days JP Morgan reported to be down on that day. We're talking about, we've got around 252 trading days on the average year. And so you put that together, and over a 5-year period of time, we're talking about 1,260 days approximately that they're reporting on in this Investor Day presentation. They had 7 losing trading days in 2012. Then they corrected something and went 2 years without a losing trading day. They had a couple of losing days in 2015 and followed up with nothing in 2016. We're talking about 8 days out of 1,260, they reported a loss. Okay, I want you to just consider the what that means. It's just, I'm sorry, 9 days, right? 9 days. Okay, my bad. 9 days out of 1,260 days, they had a profit. Okay, so we're talking about a win rate of 99.2%. Now, I don't know about you, but I think that it is a fool's errand to reinvent the wheel if it's basically perfect. And as I looked at this, I kind of had this epiphany in my head, and it was, I don't need all this stuff that I've been taught or trained or educated to look at. I don't need all of this clutter. I don't need this indicator. I don't need this alert. I need whatever these guys are doing. So went to JP Morgan to see if they were selling a subscription service to their trading ideas. Tongue in cheek, right? They don't do this. And institutional participants do not make their processes accessible to you and I. We run into ads on Facebook and Google and YouTube videos and email campaigns that people send us telling us that they can solve our problems, but none of those people, including myself, are these guys. Well, I want what they're doing, right? And so I had this epiphany that I made it my mission to copy them, find the best in the industry and just copy it. And so I went on a kind of a binge of trying to make this happen. It was really, really difficult. Take a look at their average daily profit, right? This is in the millions of dollars. And it's not like their annual average daily profit was way up and way down. I mean, it's almost absolutely expected what they were going to make. They know exactly, this is predictable. right? They average $69 million per day, 99.2% of the time. This is who I want emailing me, but unfortunately they're not. So I went on a mission. I made it my mission when I had this epiphany to try and figure out how to follow these folks. And I got sucked into everything. You guys have seen the, CNBC, the, unusual options activity. I got sucked into things like that where I was paying attention to the unusual options activity and what big traders were doing. I got sucked into things like this where I'd go in and subscribe to various services that gave me a peek into the back end of what these big funds and institutions were doing. Okay, what were they buying? But I quickly realized that there's no way that I could possibly know what the intention behind Bridgewater Associates buying Walmart may be. I just have no idea. It could be a hedge to an overall other objective. I mean, here they're only reporting about $15.5 billion in equities. They've got over $160 billion fund. Is this just a hedge? Is this part of their alpha? Alpha is beating the market. Is this part of their alpha position where this position is designed to make them return? You have no idea looking at this information. Equally, we have no idea looking at unusual options activity. What's the intention of it all? Who did it? Why did they do it? Is it just a hedge? We have no idea. Okay. You see all these big, large orders going on. Somebody bought, call options here in Bank of America. Somebody bought call options in GM. They sold put options. Is this person really bullish on GM? Maybe. Is this just a hedge? I have no idea. But what I knew was that these were the fellas and the gals that I wanted to be following. And I saw very clearly that what they were doing was radically predictable, almost guaranteed even. And so we tried some other things and hired some engineers and created some algorithms and developed some processes to identify or attempt to identify predictable rotations at this scale. And it was insane when we got it all put together, what it showed. And that's what I want to show you here today and walk you through and teach you how to do that on your own. It's my idea, it's my belief that following these big institutions, we call them smart money, right? Because 99.3% accuracy and $69 million per day. Yeah, that's pretty smart. I want to do what you're doing. We call them smart money. I believe that that is the fastest, most reliable way for you to participate in the market is just following these folks. No subscription, no recommendation service. Just learn how to see where these folks do business. And it's really simple to do. No fibs, no moving averages, no tools that somebody's trying to sell you. You can do this and you will be able to do this by hand. And that's my intention today, is to show you how to do that. Okay. So I love this concept, and I hope that you will just let this sink in. Properly exploited, one good idea that occurs to you while walking on the beach is worth more than 10 lifetimes of hard work. I hope today that you get that one idea. And if you don't, keep on searching. But I think I've got something here that is going to blow you away. Now, you may not find that you're doing $69 million a day with this, but I do want to share with you kind of a realistic result from one of the individuals that is utilizing this in our group. He sent me this email, and after 18 months of executing this, he had gone through other systems. He was skeptical and cautious at first, but after 18 months, he said, executing this, he says, my biggest problem is I got to pay more tax if I want to convert this account to a Roth. And you know how Roths work. You have to make under $150,000 a year to convert an IRA to your Roth. So this is not somebody that had millions of dollars. But look at what he was averaging on a monthly basis, $50,000 per month on a monthly basis. Okay. So I think you'll see why it works so well as we go through this. So let's go ahead and get going here right away. I want to just briefly, we're going to spend less than 60 seconds. This is me, my wife, these are my kids. I love my family, and that's really my why. Some of the things I enjoy doing, all the stuff, flying, fishing, skiing, spend time with family. I attended Brigham Young University, and I am the chief investment, or the co-chief investment officer for a hedge fund called Alpha X Capital. We manage assets for accredited investors over at that fund, and that's really fun. And then we started this side thing where for those that were not accredited but wanted access to an institutional grade system, we started a fun little kind of trading group where they were able to access that system but do it on their own if they were not, ultra wealthy. Like, the SEC restricts us from managing, the small guy can't invest in hedge funds. It's ridiculous, but it is what it is. So, we gave them access to a system that was institutional quality, and they execute on their own. That's been really fun. So that's my education experience. Let's jump right into this. I want you to share with me some tickers right now, please. And I'm going to show you on your charts. Okay. I want to show you on the equities that you're interested in, how to identify where these big players do business. So as you think of a name and as you put these things in, I'll go through as many of them as I can with our time together. I just want to kind of peel back this onion a little bit more and just introduce you a little bit further to this concept of institutions and the significant role they play. So the FINRA, which is our regulatory authority, they break us up whenever you open up your brokerage account. They break you up into either a non-professional or professional designation. Almost everybody here, even if this is all you do all day long and you pull an income from it, you're probably most definitely designated as non-professional. And on their website, the FINRA, they made some distinctions between the influence of non-professional designations and those that are designated under professional. And I thought this was really eye-opening, and maybe you will as well. They said that generally individual buying and selling has no major impact on the market or individual stocks overall. But, look over at the professional side. They said that these guys, they count for as much as 70% of all the volume. And because of their dominance, their buying and selling is what leads to big moves in individual stocks and the market overall. So we're talking about, if you're professional designation, you're a pension fund, you're a hedge fund, banks, insurance companies, large investors, okay? Very, very large, okay? These are the ones that move the market. We don't have that ability, right? Most of us don't. And that's a problem. They do. That's what you're up against. You are up against this radical predictability. And with your $97 indicator that you bought, you're trying to beat them. And it's not going to work out very well. So we're going to make it simple and we're just going to follow them. That's our best path forward. We agree on that. So how do we do it? Here's how we do it. I told you, I tried to directly observe what they were doing by going to things like FINRA, looking at their 13F filings and seeing what they were buying. Looking at, unusual options activity. Wasn't working because I had to make an assumption of why they were doing that. And that's really difficult. So here's how we do it. It's kind of like a black hole, right? And I really like this analogy because black holes are one of the largest, most powerful objects in our observable universe. It eats light, right? Okay. And yet we can't directly see them. We've never seen one directly. How do we see it? NASA says that astronomers are able to detect black holes by watching for their effects on nearby stars and gases. So that's how we do this, folks. The black holes of our markets, we follow them via indirect observation. Okay? Because they're so large, they leave an impact on the auction of the market. When we first launched our fund, I learned about this in a big way. I could move the market now. I could no longer go in and buy a couple hundred shares of stock. We were buying thousands and thousands and thousands of shares of stock. In some instances, tens of thousands dollars or tens of thousands shares of stock. And what would happen when we made this mistake one time is it would cause flash moves against us. Okay. And I'll talk a little bit about this in a moment. Their size, the sheer size of these institutional participants, they leave an effect on the price action of the market that you can detect, that's predictable. You don't need an indicator, you don't need a tool, you don't need anything, okay? You can just detect this. It's like a ripple in a wave, all right? They leave an impact. So what this is all about, folks, just so we're on the same page, you and I, we want to know when we're going to do that and stop going down, right? We want to know when we're going to do that and stop going up. That's what kind of all of us are about, right? Say if that's like boils down to the basic need that all of us have. No matter what you've been through, no matter what you've done, I don't care if you're trading Forex, like Anthony says, I don't care if you're trading SSO, I don't care what all we really want to know is when is it going to stop going up, when is it going to stop going down? Say I, right? And that's really what we want to know. And that's what this is addressing, okay? So here are the three effects. You may want to write this down or take a screenshot of this. Here are the three effects that occur in the auction of the market. When I say the auction, that may be a new term, I'm referring to the ebb and flow of price. Okay, imagine an auto auction. The auctioneer is going to stand up there and say, do I have 1,000? Do I have 2,000? Do I have 1,500? Do I have 1,700? Okay, he's going to ebb and flow price until he finds where business wants to be done. That's what I'm referring to as the auction. There are three profiles that happen in the auction of the market. Number one are what we refer to as clustering or consolidation, is a common term. The second one are chasms or gaps. And the third one are vertical imbalances. Now, to just make this slide simple, I didn't do the inverse of these latter two. Obviously, we can chasm down and we can vertical lower, okay? So there is only one of these three profiles where most of the transactions from these big institutions occur. Only one, okay? So I want you to tell me, which one do you think? Which of these three profiles do you believe is where the majority of these big traders that we want to follow, right? These are the guys that we want to follow, the JP Morgans that are making $69 million a day, who are 99.3% accurate. Where are they doing business? Which of these three profiles do you think? Let's see here in the chat. We've got clusters, A, B. We've got clusters, A, Christo. Awesome. We've got Bs, lots of Bs, lots of As, Bs, okay? Now, what I'm about to say, there are exceptions to this, okay? So I want to just introduce you to the reasons why this is true, and I'll walk you through the logical reason, and I'll prove it to you. The answer is A, okay? C, awesome, Trey. Thanks for everybody. Thanks for your participation. This is awesome. Okay, so the answer is A. Most of the institutional participants, those big money traders, they're the ones that move the market. They do business in this kind of a profile. Okay. So here's the logical reason. Remember I told you when we started our fund, we kind of started dealing with some higher class problems than what I had experienced before. At Goldman Sachs, our computers did most of our executing. Our hedge fund, computers watch over us, but we execute manually for 2 of our 3 systems. Here's what happened, okay? If I want to go into the market and, we've just got XYZ equity, okay? If I want to come in as an institution and I want to purchase, say, 200,000 shares of this equity, and this equity averages on a daily basis, let's just say a million shares, okay? Average daily volume, okay? They average, we're just say 1 million shares per day. And I come in, I want to buy 200,000 shares. Well, if I want to buy 200,000 shares, there's got to be a seller on the other end of that transaction, okay? So if this equity averages 1 million shares a day, all right, and I come in with an order at the open because I'm so excited that I'm onto some news with my new hedge fund, and I've found the next big thing for my clients, and I come in and execute this order, what's going to happen is if I submit this here, let's just say I submit it as a market order and the price opens up at $100 per share. There may be 10,000 shares that are being offered at $100. So I'll get 10,000 of my $200,000 ordered or filled. And here's what will happen next, okay? What will happen next is the auction, which is just a computer program nowadays, it will rapidly search for sellers. And here's how it does it. It will go way up, okay? It'll start moving price way up, okay? So here I got 10,000 shares covered and filled there at 100. It's going to go up to 102 and maybe they find another 1,000 shares. You get the point, okay? We're all the way up to 105 here and we got 100,000 shares finally filled. We pop on up here to 108 and I've got another 50,000 and then we pop up all the way here to 110 and my full trade is filled. My total 200,000 shares are filled. The moment that is done, it crashes right back down. This literally happened to us a couple of weeks after we had raised all of our seed capital for our fund. And it was really embarrassing. We shouldn't have done it. But again, my experience was Goldman Sachs, a lot of it was just computer operated. And they send them out in very small micro orders. This happened to us, okay? And so price went way up. And here I own the stock mostly all up here, 10% higher than where it's trading when I'm done getting filled and it crashes right back down. This is what's called unorderly transactions from an institutional participant. They don't want this to happen. The same is true if they're getting out, right? You guys remember that flash crash years ago? Okay. That was a fat finger mistake. All right. That was somebody like us who pressed a button, submitted too many contracts to sell. And what ended up happening? We had this big flash crash, okay, where the market dropped. You know, it was like, you guys remember it back here in August of 2011. Okay, we ended up dropping here like 15% in one day. It was incredible. And then it recovered, almost recovered the entire thing all in that same day. Okay, that's not what people want to do. That's not what institutions want. They want predictability. They want order. And so I would say 95, 98, 99% of their transactions are done in an orderly way. So that's the logical reason. Okay. Here it is proven to you on a chart. So here we're looking at Facebook. We're looking at an intraday chart. The dark gray area is the overnight. The light gray is the intraday price action. I'm looking at this time frame because what we see here is we see price closing the day out right here, opening the next day all the way up here. It was 14% higher. Okay, they're reporting earnings and it moved really quick. A lot of us look at this and say, and all of our talking heads say, oh, they reported amazing earnings. Facebook up on positive earnings report. Okay, but I would propose to you that the institutions who make all the money, they were already in, okay? And no big buyer came in right here to cause it to surge the moment that their earnings came out. Here's how we know that. We can put on our chart what's called a volume profile. Most of you have access to this on your brokerage platform. A volume profile takes volume, and instead of putting it vertically down here on the bottom, it slaps it up horizontally and shows us where the volume occurred at what price level. So we see these like horizontal green little nodes here, okay? We had a lot of volume go off right here. We had a lot of volume go off right here. We had a lot of volume go off in there. And then something happened. They reported earnings and it shot way up. And what happened to the volume? Not much, huh? There was no big buyer that came in and drove price up here. Okay. Why did the auction shoot up? Well, why does an auto auction shoot up rapidly? The auctioneer's job is to find where business wants to be done. Do I have 1,000? Oh, I've got 5,000. Okay. Do I have 7,000? Oh, well, I've got 10,000. He's going to move price up rapidly where people want to do business. Has business been done if people are just saying, yeah, I'll offer 10,000? No, it hasn't been done in auto auction, okay? There's just interest higher than what he's asking for. And that's what the program that moves price behind the scenes is looking for, is where are big institutions putting on orders to do business? So it rapidly tries to get there, and then what does it do? It clusters, and there's our volume. Remember, they make up over 70% of all the volume, and they're the ones that are insanely profitable and insanely consistent. I just want to follow them. And then we go rapid, rapid, rapid. Look at the profile here. Not much volume. And then what happens? Clusters, and here's our volume. So what we've covered so far is that, number one, these guys are just ludicrous, and I want to subscribe to their trade recommendation service. They don't, come to find out, they don't let us. So, but I still want to follow these guys. They're the ones that move everything. And come to find out, they leave ripples in price that we can detect. Okay. So we're going to do that. We're going to spend the rest of our time doing this live in real time. Okay. This is an old chart. We're going to do this live in real time. So pull out your ticker symbols and we're going to do this. And I'm going to show you how to do this by your own hand. Okay. So first one here, I know you guys put them up there, and I apologize. I maybe had you put them in there a little bit early. So for the sake of me scrolling all the way up, kind of losing my place in the chat, can you just go ahead and put them in? Rock Falls, I got you there. We've got ABBV. Excellent. Okay. For those of you that want me to do this on your stock, put it in here. Okay. Now remember, we want something that is heavily traded by institutions. Somebody had asked, does this work on currencies? Well, currencies are the largest financial products in the world, but they're so large, right? I mean, you go out to the middle of the Pacific Ocean and a humpback whale could have just jumped out of the ocean a mile away and you wouldn't even detect it, right? Because the ocean is just so large. Despite the humpback whale being so large, if you're a mile away from it, you don't detect any ripples. So the Forex market, the currency market, is so big that even these big institutions, they don't impact the auction like they do in the equity market. So you can stay over there, you can do equities. I really don't care about the underlying. I want to do something where I can predict what's going to happen. I don't care what that product is. I just want to be able to predict it with tons of accuracy and lots of profitability. So currency is not going to be a good asset to use to follow institutions because they disappear in currency. You don't even see their impacts on it generally. All right, let's look at ABBV. All right. So here's what we're going to do. We're going to go to a 20-year chart. Okay. 20-year chart. So this process is fractaled. If you don't know what that means, okay, it is applicable on all time frames at all times, but shorter time frames are working towards the bigger time frame. So I'll give you lots of examples here today. We're going to start on the big time frame. Okay. So as we look at this chart, you and I have a tendency to do a couple things. We come in here and we find dots to connect, right? We'll come in here and say, oh, yeah, there it is right there. Man, when it comes down in there, every time it's coming down there, it's popped up, okay? And oh man, look at this here. We've got the classic little, triangle pattern, okay? Or we'll come in and, we'll do something like this. We'll draw things that are going to the ground, right? Okay. How many of you guys know what I'm talking about here? How many of you ever done this? You know what I'm talking about? Or we'll come over here and we'll draw another one that goes up like this, and another one that goes up like this, and and then we'll overlay our MACDs and our moving averages and our RSIs and every other thousands of these indicators, right? Is it working? Throw it all out the window, all of it. Remember, institutions move the market. They leave a ripple in price action that we can detect. We know that they do business in areas almost without exception where price is clustering. Okay. Did I hack your camera, man? No, I know, I get it, man. I've been there. Long time ago, I've been there. It's so frustrating. Okay. Patterns are just fictitious. You've been lied to. Don't do it. Follow institutions. So here's what we're going to do with this. We are going to come back to this time period over here. Back, and I need to go to a weekly chart here because there's not 20 years of data on ABV. So we don't need to be on a 20-year chart. We're going to focus on trying to figure out what this algorithm is, because this is math, folks. You don't have somebody at JP Morgan say, oh man, we crossed the moving average and it's time to buy, right? It's not, this is a computer, it's an algorithm, it's consistent. Okay. So what we're about to do will work from here on until one day, if retail traders ever catch on to all of this and they have to change it, but they haven't changed it in over 20 years since the internet came online. So we're going to focus in this region from 2013 through 2016, and we're going to build out the institutional auction matrix. We call this a matrix, okay? It's going to tell us every level where these pullbacks are going to happen. 95% of every single bottom and top will happen from now on. And we're going to build it out just in this area right here. Okay, so here's how we do it. We locate areas where price is clustering, because that is where institutions do business. We're not interested in these little things here necessarily, because that doesn't tell us that, you know, there was a lot of institutional transactions there. We're looking for areas where, again, we're looking at a weekly chart. So we want to see at least 4 to 5 weeks of price just kind of congregating. That is a auction zone. That's an institutional auction zone where these guys are doing business. So that's what we're looking for right here. Okay, this is an auction zone right here. We got 1, 2, 3, 4, 5, 6 weeks of prices kind of congregating there. Okay, this is an auction zone right here. 1, 2, 3, like 8, 9 weeks in here of just kind of congregating. We've got an auction zone here. Now remember, JP Morgan's right 99.3% of the time. So their activity and where they do business must be connected somehow. And that's where we've been gifted with a brilliant mind, and we see little puzzles and little patterns, and we're going to try to connect these things. So let's see if we can do it. So all the way on my left, I've got 5 weeks or so there of clustering. That's where I'm going to start. I'm just going to take my trend line tool, and I'm going to go to this candle right there. Okay, the follow-up one stalled, and it stalled for the next several weeks just in kind of a general sideways area. Okay, I'm going to start right there, and I'm going to drop my little pen needle there. I'm just going to drag this thing across, and we're just going to try and see if we can't identify where some of these other clustering areas are connected to one another. Okay, that's what we're going to try to do here. Okay, so let's just do it this way. I kind of want to grab this here, but that's pretty steep. Most equities aren't going to have a curve. Their auction zones aren't going to have a curve like that. Okay, so I'm going to adjust my curve here just a little bit by coming over here and pulling this one up. Okay, I think I'll probably come up to right about, somewhere right in here. Okay, somewhere right there. All right, and then actually I kind of want to pull this sucker down a little bit, and I think that is about it. So let's just see this here. And again, I've not done ABBV. This is my first. This is live. Okay, let's just see here if we can't see several areas where we've got these clustering pockets where these things just kind of connect. Okay, that one's not a cluster, right? It was kind of a V bottom, but boy, we've got, you know, how many weeks of clustering there, right? You've got, boy, that's a lot of clustering right there. And look at the extended amount of time that we clustered here. I kind of like where we're going with this. So let's build this out. Okay, again, remember, this is a mathematical algorithm. Okay, and I'm demonstrating to you today how you can do this by hand. Okay, well, Jeff says it looks very subjective. Let's find out. So an auction zone occurs within a region. Okay, so I'm just going to duplicate this line, and we're going to define our first region for our auction zone. Okay, and so this is my first region. So if I'm above these set of blue lines and I'm dropping down into it, I'm assuming that this is going to hold as support as institutions transact business there. Every single auction zone from here on out is going to have the exact same sized region. The next part of this is, these two things are the hardest part. And Jeff says it's subjective, and I love that that he's challenging it, because it does appear subjective. I'm here to show you that 95% of every single one of your tops and bottoms are going to happen with what I'm about to do. And we created it by looking years ago and building this out. So I'm going to pull up. I'm not changing the trajectory of my lines. I'm going to pull up these lines, the same trajectory, same slope. I'm going to pull it up to this little auction region right here. Okay. So every single one of my primary auction zones, these are where my big shifts occur. These are little shifts. Okay. Remember I said there are auction zones on all time frames. Okay. There's auction zones on all time frames. This is your big one. Okay. Your long-term operation. Okay. So every zone is going to have that much space between them. Every single one of them from here on out. If I've done this right, recent highs and recent lows will come exactly within this framework that we've built. So here's what we do. We take our little measuring tool here, we pull this sucker up. We duplicate this line, pull it up to the top of our measuring tool, put another one on it with how large these zones should be. If I've done this right, at some point in the future, when we've broken up above this zone, this will be resistance and either will come all the way back or will at a minimum stall here for multiple weeks. Let's see. Let's see what happens. Okay, let's keep doing this. Let's build maybe one more layer to this. Okay, let's build one more layer. Then we'll zoom out and see how's this working. Oh, I didn't mean to steal away that, meant to duplicate it. Let's pull it up. So I love, Jeff, you also said it looks very subjective. One way that we avoid being subjective is I'm not building this matrix on any recent price action. Do you see that, Jeff? I'm looking at 2013 through 2016. You're right. We have a tendency to bend lines, right? You know, we create connection. We'll come in here and kind of do this descending wedge, okay? And to avoid objectivity and to remove as much of that as we possibly can, it is best to create your zones matrix, your institutional matrix, away from any recent price action so that you don't bend your lines to justify some recent low. So let's zoom out. Let's see how this went. Okay. Take a look at this. Remember, we constructed this with only this data in our field of vision. Okay. Let's just take a look at this, how this went. Again, this was just the first stab. Okay. Well, there's our auction zone. Where did we drop down to? Right at our auction zone. When we drop down below that, man, that's eerily close to our little auction. When we broke up above, where did it come back down to? Auction zone. What about that right there? Auction zone. Where did it go up to? Auction zone. Where did it go down to? Auction zone. Where did it go up to? But look at how many months we just kind of here. But where did we go down to? You see that big bounce on that one. Okay, it clustered below this region. Again, this was my first stab at it. Okay, where did we go up to? Auction zone. Where did we go down? Auction zone. Auction zone. Auction zone. Here we broke out above. Where did it come back down to? Auction zone. Where did it go up to? Auction. I would refine this one just a little bit, I think. Okay, but remember, I constructed this matrix from this area, had no idea, it wasn't even paying it, didn't see any of this. And it's eerily strange how almost every single major peak and trough is happening almost exactly at these zones. Again, I think we can refine this, but let's grab another one. Okay, let's grab another one here, and I want to just demonstrate this to you a couple of times. And your homework assignment is try it out. Okay, so subjective, Jeff. Okay, again, is this peak? Did that have anything to do with any of this? No, this is subjective. Okay, that's subjective. This is subjective, saying that price action here is connected to price action there and price action there. That's what's subjective. Okay, I focus in this region and using a framework that is mathematical in nature. I did it by hand this time to show you you can do it by hand. Boy, it's eerie how close almost every single peak and trough is right within that framework. All right, let's go to another one here, and let's, we'll maybe spend a little more time detailing up on another one. I'm just going to go up our list here. So we had UPST. Let's see here. I'm not UPST. Okay, so let's see here. What is the volume like on this one? Do we have a lot of institutional participation on it? Yeah, volume's starting to pick up. We've got just over a year of time on it. Because we're just learning this process, I want to give you something that shows how predictable it is across an insanely long period of time. So let me do something here that maybe has a little bit more data, just so you can buy into this. Okay, I appreciate the skepticism. I want you to be skeptical, and that's not a bad thing, especially in this environment where everybody's trying to convince you of everything. Okay, so let's go to Boeing here. Next one's up, Boeing. Okay, I'll do as many of these as we can. So Boeing. All right. Okay, so that we avoid the issue that Jeff suggested. Well, man, this just seems like really subjective. How about we go all the way back to 2003, 2002, 2001, and build it in this region? What do you guys think? You think that all the future highs and lows in this equity, the major ones, 95% of them are still trading within this framework? I guarantee you they are, because institutions haven't traded any different since the internet came on. Here we go. We're looking for clustering areas. I'm on a monthly chart now. Okay, so it's going to be a little bit harder to decipher, cluster. Well, here's some clustering, right? That's multiple months. We got 1, 2, 3, 4, 5, 6, 7, 8 months here. We've got some nice clustering here. We've got several months there, about 5, 6 months or so. Okay, so let's just start out. Let's just build our first one and get that one under our belt. So I'm going to come over here to February of 2002. I'm not even looking to the other side of my chart, recent activity, not even paying attention to it. Okay, February of 2002. Let's see if this works. Okay, so I'll extend that over to the right. I'm going to take this and put this up there on these tails. Okay, I'm going to put these up here on these tails here, on that far one over there way back in 2002. And then I'm going to duplicate it and pull it down, and let's create our first auction zone region. Okay, I actually don't like how wide that is. It's pretty wide. Let's pull that down a little bit. We want a region that is a little bit more precise. All right, so that's our first region. Now, we don't have a lot of proof that that's working long term, especially recently, but we've got some things here, right? I mean, here in 2008, it goes real quick and then stops. Why'd it stop? Institutions are doing business. Okay, stopped for 1, 2, 3 months here. Okay, real quick down, stopped. Okay, all right, so this is our first one. Every zone that we do from here on out is going to be this large. Okay, let's find our second one that we feel like, yeah, this is about the distance between each zone. And to do that, we're just going to duplicate this. We're just going to glide this thing up to see, are there any other zones here that just kind of happen to line up? This one's hard here, and I'm willing to do this. I actually would be more inclined to come into here. Okay, and let's just duplicate this and pull that up, and make sure that our zone here is the same size as our first one. We're going to do that right there. So what do we see here? We see it went really quick up. Again, remember, institutions aren't doing a lot of business when something's moving really fast. The auction is attempting to get to an area where they want to do business, and then it stalls. Okay, and so we see a lot of that evidence in here. When you break zones, you move really quick. Okay, so we've got some things here. It broke out, came back down in, stalled here for 3 months or so, broke down below it, came back up into it, give institutions a little bit more time. They know what's going on, and boom, what happened to all you guys? you lost 40% of your retirement and had to keep working. They know what's going on, and following them, you just follow these zones. You break down below one, get out of a bullish position, break up above one, get into a bullish position, come up into one, get into a bearish position. It's a little bit more technical than that, but this is a very simple framework that you can use where you don't question whether or not it's going to keep going down. When you break a zone, you assume it's going to the next one. And that's it. Okay, so let's build this out. Okay, let's first build it out to the downside and see, did this predict our low in 2008, 2009? Let's see. Okay, that's our measurement tool. We'll pull that down there to the very tip of that. This is the region, the size of our zone. Okay, we're gonna pull that down there. We're gonna duplicate this. Well, that's cool. It certainly predicted that low, but man, I don't have a whole lot more to go off on, and it wasn't down to that one. So let's see. Okay, let's see how we've done on this one. Again, just taking a first stab at it. And we'll see 95% of every bottom and top should happen in this framework. 95% of them, folks. If you're following the institutional zones and not using trend lines, okay, trend lines, you can see them after 3 touches, don't work the 4th and 5th one. They stop working. They're a retail phenomena that is a self-fulfilling prophecy that by the time you can see it on your chart, they're getting close to not working anymore. These auction zones will work. You don't have to change them. You don't have to move the lines. They will work indefinitely as long as institutions keep on stealing your money and you keep getting in and out of positions at the wrong time because you don't know how to follow them. You got to start participating with these folks, not against them. All right, let's build this sucker up. We're trading up north of $200 a share. So let's just build this matrix out and then zoom out and see how many of our major peaks and troughs fell within this framework. 95% of them should be, we'll know we did it right if that's about our number. Okay, let's build this up. We're all the way back in 2007, 2008, and it's a gliding slope, but we'll build out a couple of more of these here because we know that, Boeing had some issues, right? With their 747 MAX, and they faced some issues. I wonder if the high came into this zone. I wonder if their highs before their 747 MAX issue, was it just not exactly at their zones? How about the pandemic? Right before we were locked down back last year, January 2020, I wonder if we were at a zone, or after we bottomed out, I wonder if we were at a zone. I think Boeing is heavily traded by institutions. It's one that we trade heavily at our fund as well as with our retail group, the Super Trader. And I think you'll be blown away at where we were trading before the pandemic and where we bottomed out at. Let's see. All right. I think we've built enough layers here. Maybe let's zoom out and see how it's going so far. Okay. We're kind of like in the ocean. We don't know what's going on. We don't know if it's actually going to work. Let's zoom out and reveal it. Oh man, okay. So again, we created this. All we saw was everything here, okay? So here off of those lows in 2008, 2009, we went way up here, and then what do? We stalled there. This was all support, auction zone, okay? Went way up in 3 months, and then we stopped here for 3 months. Went way up, 2 months, took 2 months to go up, and then where do we stop? Auction zones. Okay, we dropped 2015 going into 2016. Where did we stop? Auction zone. It took us 2 months to get back up. Where did we stop? Auction zone. Then we went way up. We stopped, and we had a little clustering here, so it paid attention. Went way up, took 1 month, stopped right there for a month and a half. Way up, where did it stop? Month and a half or 2 months or so right there. Way up, where do you see that little tail on the monthly candle? Okay, I don't know which one's going to, be the big one. That's not your job to guess which one. You just operate from a standpoint of, if we go up to a zone, I'm going to assume it's resistance. If we break above it, I'm going to assume we're going to go to the next one. I'm going to put on positions accordingly. Okay. So Anthony says, how do you trade heavily on monthly charts, shorter term strategy? Okay. You're on shorter term strategies right now, Anthony, because of the lack of predictability in the way you're operating. The big money is made by being able to hold on positions that are running and adding to them. But I told you that this is applicable on all time frames. Okay. We do apply this on the intraday time frame. I'll give you a look at that. We'll use options on an intraday time frame to get into very, very short-term auction zones. Very short-term. They're fast-paced. I'll show you some here today. But this is what we'll construct on those. This is one day, just a couple weeks ago, where we're trading a very short-term chart. Now, these are all risk-free. We hedge within about no longer than 30 minutes, where we remove all of our risk. Every single one of these positions are risk-free. So, Anthony, the answer to your question is that we trade a shorter term chart for shorter term positions. Okay, we trade auction zones that are shorter term in nature. These longer term ones, you can put more capital to work in those ones. Okay, and do things that are getting you a little bit closer to where everybody wants to be. Nobody wants to sit around a computer all day long, pulling the trigger. That's work. That's a big job. And it's certainly lucrative. And I'll show you how we can do this on an intraday chart and how lucrative that can be, but it is some work. All right, let's keep going here. And let's just see, we've got a couple more layers here. I didn't realize how high up above that 747 max high was. But I want to see and make sure, I want to see that high, were we at a zone? So far, it was looking really cool and spot on, but let's just see. All right, if you've got questions about this, if you're with me, if you see, at least, are you staying with me? Do you see what I'm doing? You may not understand how to do it just yet, but at least are you seeing yet how, oh man, yeah, most of these tops and bottoms are happening exactly right within this framework. And this was built all the way back in the early 2000s, and it's still to this day picking the tops and bottoms. You know, go ahead and think through your questions here, put them in the chat while I'm completing this. I think that's our last one. And let's just actually see everything here. Okay. Awesome, Mark. Okay. All right. So here we are. Okay. We already went through this where, you know, again, we constructed this with only this data in our view. Okay. So we went up, stopped right there temporarily for 4 months. 2 months, went up here, stopped right at our zone, cluster, broke up above, came back down, was support. Okay. Here, where'd it stop? Right at our zone. Where'd it stop? Right at our zone. We covered that already, right? Where'd it stop? Right at our zone. Where'd it stop? Right at our zone. Where'd that tail stop? Right at our zone. Where'd that tail stop? Right at our zone. Where were we at prior to their 747 max issue? We were way up here. Let's look at a daily chart and actually see, okay? But it dropped. Where did it stop going down at for a couple months? Right there. Where did it go back up to the next month? Right there. That zone, that zone, that zone, okay? That zone, back up to that zone, drop. You know, again, this was my first stab, but right, that's where to go up to. That zone, where to go back down to, that zone. Do you see this? Are you guys seeing how insanely, like, that zone, drop down to that one, that one. Look at the one we're at right now. Where's it been stopping at for 3 months now? How many of you see what's happening here and how, I mean, even if you don't want to be convinced, we built this based off of this data. And although I would even just slightly shift my zones further if I was doing this by hand, okay, it's insanely accurate. Okay, trader sees it. Okay, how many of you see that? Oh, it dropped right down to a zone and stopped there, and we built this out all the way over here. Stopped right there in that one. Stopped right there. stopped right there, stopped right there, stopped right there, stopped right there for 4 months, stopped right there. This has nothing. I mean, we don't do this, right? We come over here and we do this number. We come in and we take our chart and we say, you know, yeah, this is connected right here. We draw a nice cool trend line, right? And we could draw that now that we had that third point there. You can draw it with 2 points, but that's what we do. You and I, we do that. It's a trend line. Okay, we come in and that's what we do. And we say, yep, that's it. That's my support. But by the time you identified it, what happened? Doesn't work. Doesn't work. Because they're not connected, folks. They're not connected in the way that you're seeing it. This is a mathematical algorithm that they're operating. Okay. A line chart. You're talking about horizontal? Is that what you're talking about? So right now, yes, Boeing, this is a support zone. This is an area where you're going to go into it. You don't control the movement of the equity. You don't know if it's going to hold, and you're not going to question whether or not it's going to hold. You're going to get involved. Now, this is another layer of the conversation because, you know, I would prefer that you understand how to hedge yourself if it breaks down. Okay, but you're going to get bullish here. And as long as we are closing above that zone, you're going to hold till this zone. You're going to hedge here or get out. If it breaks above, get back in or take off your hedge, let it run on the next one. Or put on a bearish spread that says it's going to stall there for a couple of weeks. Okay, let's go back. Let's go here to a daily chart here. And I just want to see, you know, when we broke up at that zone here before their big 747 max issue, see these chasms here? Generally, when you break zones, you chasm around them. But yeah, you're going to be operating from, I mean, you look at this, look at like right on our zone, right on our zone. Hit our zone, pulled back, broke up above it. Okay. Obviously, understanding the right strategy to be able to take advantage of these in the most optimal way is another layer to this. But I told you I was going to talk to you about one thing, and that is a framework that you can use that will tell you where to put on positions and when to take them off. You break down below this, take off your bullish, wait till the next one. Okay. So a line chart. So we can shift this chart to a let's pull it up here. Okay, we can shift this chart to where do I do it on that the Thinkorswim platform? I forget where to do it at. A logarithmic. Okay, are you referring to a logarithmic scale? Is that what you're referring to? So on Thinkorswim, the platform's not capable of drawing a line 20 years ago and maintaining a consistent logarithmic line. So it doesn't work on the Thinkorswim platform, but over at Interactive and in our algorithms over the fund, we do have it programmed that way. But 95% of every single top and bottom happen within this framework, folks. Bottom, top, top, bottom. Okay. Almost every single one of your tops and bottoms are going to happen exactly within this framework. All right, let me show you another one. Maybe you guys want to do a shorter term one? What do you think? Are you guys with me? Can you see how just insanely we built this on this, guys. We were just focused on this region and some we just first stab stuff. I didn't spend a ton of time doing it. I didn't perfect it, but it's insanely, it's crazy how I've got now 20 years later, it's still following the same thing. Cool. All right. Give me some shorter term. What do we got? Give me something shorter term. We'll build it on that one. Okay. INTC. Actually, Rock Falls, man. Did I do one for you? Let's see here. I'll give you the INTC chart. No, man, not doing Bitcoin, dude. You can throw your money into that. I'm in it for consistent, predictable results, and you know, doing any speculating here. We're looking for consistent, predictable profits on the level that a JP Morgan is, and it's just not a product yet that's built out. This is what we're looking for. This kind of reliability in our profitability. It just does not go up and down. That's what we're looking for. We're looking for getting you 50,000 a month, and you're just a regular Joe. You're not doing that in Bitcoin. Okay. All right, let's do one. Let's see here. Tesla. You guys want to do Tesla? Okay, cool. Let's do Tesla. Okay. So let me pull up Tesla here. Boy, lots changed since just a couple of years ago. I wonder if the same auction zones down here, back when it was a $40 stock, are still the exact same auction zones as it is now. That's a $750. What do you guys think? What do you think? I think it is. But let's see. All right, let's go here. Let's do this. So we're going to identify an auction zone. So a clustering area. This is a big cluster, folks. That's a big cluster. Okay. So let's do the longer term frame, and then we'll put the shorter term on top of it, because the shorter term works in connection with the longer term. So here's the longer term. I'm just going to come over here, and I think I'll come like right in this kind of an area, and we'll just cross this thing in here. Okay, so something like that right there. Okay. All right, we'll extend that over there. We'll extend it over there, and we'll duplicate. We'll pull this up. Okay. And then maybe we'll just pull this down just slightly to capture these those tails right there. Okay. This is the top region of a wide cluster area. Okay. I don't know if it's going to stop, right here on the way up, but it should at least continue up to here before I'm considering taking profits or getting bearish. Okay. So that's my first zone. Let's just see here. Pfizer, you want to do Pfizer? I'll do Pfizer. Let's duplicate this. All right, let's pull this down and see kind of the first region here of our zones. Okay, now this is not what you're not trying to connect it to these things. There's not a lot of clustering there, but there is a lot of clustering right there. And we've got several months here, and that's pretty good. As long as we're touching several of those clustering areas with the height of these zones, then I think we're going to be good. So let's pull this down. Let's duplicate this. And as long as this top line is hitting several of these areas, I don't like it. I'm going to pull the top line up a little bit. I'm going to pull it up to touching the bulk of where price is clustering. And then I'm going to measure from that top line. And then I'll put my bottom line in that respective area right there. Okay, so each auction zone should be about that. Have that much distance between them. A growth equity. This is a key piece. I'm not giving you everything here today, guys. Okay, but I am showing you can do this. This is like not something you couldn't go and do right now. But it is an algorithm that we've spent a ridiculous amount of money developing to track their behavior. A growth equity is going to have about 100 to 150% move between the top of a top zone and the bottom of a bottom zone. As you get more to a blue chip, your zones are going to have a differential of between 7 and 8%. Okay. So let's just do this real quick. Let's just build on this. Obviously, we rocketed higher. Let's just see, is it still trading in these zones? Is it still, are all of our tops, all of our bottoms, most 95%, are they happening in these zones? Let's see. Okay. That would be kind of ludicrous. Yep, this is the step that determines the distance between each zone, what we're doing right here. So we're just going to build out, this is a matrix, folks. This is a matrix, okay? You break a zone, you're going to assume it's going to the next. Don't have on a position that would not be a good position to have on if it's going to go to the next zone, if you break one, okay? You have to accept your role in the market. You can't move anything. You don't know if they're buying or selling. Remember, we're not directly observing their activity. So when you go up to a zone, you don't know if they're distributing up here and it's going to sell way off. And when it drops down to a zone, you don't know if they're buying, so it's going to go way up. You're just going to assume that they're selling up here and they're buying down here. And if it breaks, and we, again, on the monthly time frame, you're not going to make decisions on a break on the monthly. You're going to get into a weekly and a daily time frame to determine breakages. Okay. But there's behaviors to look for that we just simply don't have time to go over, that you know for certainty that you've broke a zone. It's going to go most likely the next one. You just get out of your position. All right, let's just build this out. Let's just see. Let's just see. Obviously, we've gotten way up here. Man, this one's kind of crazy to, I mean, we're only at 200 right now. Woo-wee, that's high. That is high. My goodness. Okay, I'll do this as fast as I can. Okay, let's just pull this up here. I'll share these. I'll share this chart, these charts with you as well, folks, so you can have them. Oops, didn't mean to steal that one. Let's pull this up. Oh man! All right, here's what I'm gonna do. I'm actually gonna double it. Okay, I'm gonna create a. I'm gonna skip every other one just so we can get up here. Okay, you know, if for just insight purposes, we want to fill in one middle one. If it happened to stop, cool. I'm going to skip one and I'm just going to double the size here so we can just get this thing up here real quick, like to where we're at right now. Okay. Just skipping the middle one. Whoa, that's cool. Look where it pulled back down to, right at our zone. Huh, that is crazy. Let's see if the top was right in our zone. Let's see if the top was right in our zone. We're getting up there. This is a nosebleed section. This is one that I think we'll want to put that layer on. We're right at that zone right there, though. Remember, we're skipping a layer here, but that's right at our zone on the way up there. And you don't know which ones are going to stop at. You just assume that it's going to stop it if it's coming into a zone. And if it breaks back above it, assume it's going to go to the next one. Your job should be easy. You don't control the market, so you don't try to control. You don't try to guess. You just follow the zones. You just follow the zones. And there's not a framework that will give you the accuracy that this one will. Not a framework. You're following the folks that move the market and you're participating with them. And it just is a game changer. All right, I think we're getting here. My goodness. I should have skipped like 2. I'm going to give you a tool here for hanging out with me today that you're going to want to have. I'm just going to give it to you. Going a little bit over here, but we're going to wrap it up. Ooh, man, I'm like getting elevation sickness. Sorry, folks. That was a fun experiment, but this one, obviously, we've got a long ways to go. Whew, we made it. Okay, now I'm going to actually pull this up because remember we skipped every other one. Okay, I'm going to just fill in this one here because I think that is relevant for where we capped out at. Okay. I think that'll be good. And then, yeah, that's good. And then remember we had one like after the first, like it was this one right here. Let's put it there. These are the kinds of things that you're going to look for just to make sure if you've done it right. Because again, 95% of all the tops, all the bottoms should be coming into, they should occur at your zones. If they don't, you've not done it right. 95% of them should happen in your zones. So although I'm I've skipped a couple. I like to come in here. I'm just going to come back in and just take a look here. We just stalled right in this region. And remember, I was skipping 2. I was skipping 1 there. Yeah, perfect. See, that's why I want to do that, because look at this. Right at our zone. Right at our zone. Okay. Right at our zone there. So we got this thing right. Okay. Can you believe this? And again, this is just first stab. Okay. First stab here, but look at where our top was at, folks. I mean, if somebody told you that the way that it was programmed to trade down here is connected to the way it traded up here, you just wouldn't believe it. You wouldn't believe it. Most of it, we have a hard time drawing our trend lines, but so we're doing ridiculous things like this. Oh, it's still holding the year and a half, rocket trend line. I saw it I can't tell you how many people on the internet, oh, it broke the trend line. Okay. You're not in control. Neither teachers, neither educators. I'm not in control. Institutions are in control. Whether you believe me or not, you're going to one day believe me. And your best path forward is participating with them, not against them. Let's go to a 2-year chart and see this. Okay, remember, I skipped zones here. Okay, I was skipping some zones. Okay. But this is just insane. We came right into our zone. Remember, I skipped a zone. That's our zone right there. We capped out of the zone. I skipped them. See, the difference between them there? I was skipping to just get this thing up here, but, right in our zone. Go, go, go. Where'd it stop for 3 weeks right here? Right in our zone. Where to go up to? Right in our zone. Where to drop down to? Right in our zone. Where did we cap out at? 1, 2, 3, 4, 5, 6 weeks. What were they doing? They were selling on to all y'all. Everybody was talking about it. I don't know that while it's live, but you don't need to know it. You're assuming that it's going to hold as resistance. When you get in a zone, you break up above it, you assume it's going to go to the next one. Get back in, fine, okay? All right. But this is the auction zones framework. Okay, I mean, again, right here, again, this was just first stab, but boy, right at our zone, we dropped down, and where'd it cluster? Right at our zone there for how many, boom, ripped. Where'd it stop for 4 weeks? It took 1 week to get there and it stopped. Why? Because all y'all chased it right here. They dropped it back down and took all y'all out and then ripped it right above the zone, right back down to the zone, right above the zone. Okay, we're always going against what they're doing. Okay, most of us are always doing exactly the opposite of what they're doing. We're right at a resistance zone right now. Okay, what am I going to assume? I'm going to assume it's going to hold as resistance. Is it going to? I don't know. I don't know, but I know one truth. I don't control the market. I don't move the market. I know who does, and I can't directly observe, are they buying or selling? All I know is that this is where they do business. My job is just to assume that they're going to do business here. We like to use spread trades, okay, that basically we're able to say, hey, I don't know if it's going to go up or down, but I know it's going to stall right here. And I can use options to make money if it just stops there temporarily. I don't care if it goes beyond it, just stop. Okay? That's a great way to do these, okay? Yeah, there's, that's the other discussion part of this, is using the right strategies to take advantage of this. But this is the baseline of the entire discussion, folks. This is it. If you've got a framework where you can know where to expect things to stall going higher, look at this, rip, where it stopped right there. So all the news is talking about, you're getting excited. You're not, though. You're going to either wait for it to break up above and then get in, ride that run. Okay. Or wait for it to come back down to that one. Again, we have signals. We have rules that say when it comes down to a zone, it should do certain things before we pull the trigger and just get right in. Okay. But from a just an introductory framework to the reality of how the market works, guys. It is insanely predictable, and they're stealing your money left over fist. And the people that are teaching you have nothing to do with institutions. They have nothing to do with them. Even if they were a market maker on the floor of the exchange back in the 1970s. Okay. Algorithms operate. They're radically predictable, and they make all the money. You are going to operate best when you start to do things with them, not against them. And that's my message to you today, is that this is a matrix, folks. And it may seem random, but it's not random. You look at their results, it's not random. That was my epiphany back in the day. Okay. That was my epiphany. And I hope that that's your epiphany. I've stolen a lot of your time here. And I'm going to wrap this up, and I'm going to give you a little thing here where you can learn about this a little bit more. So you can delve into a little bit deeper. Okay. Look, this is a fact. Your fastest, most reliable path forward is either rent the Bloomberg terminal for 24 months at $15,000 a month, hire a statistician, a mathematician, an engineer, multiple engineers, okay, C++, developers, and create your own algorithm, okay, 15,000 times 24 months. And even then, you're not spending anywhere near the budget what these institutions spend on creating their algorithms. Or you can just follow the guys that are already doing it. Just learn how to identify their activity and follow them. Okay. This is your best path forward to making it predictable and reliable. This is predictable. It can be reliable. And that's my message to you, is that people make you feel like it's random, like what happened today in the market, FOMC and all the drop that we just had. Okay. Take a look at the S&P. Okay. Look at the chart of the S&P going back over the past 20 years. Here's your auction zones on the SPX. Okay. Look at where we were 2008, 2007 zone. Look where we bottomed out. Look at where we stopped going lower at the low of the pandemic low after they locked everything. Look where we were before they locked everything down. Okay. Look at where we are now. I mean, this is predictable, folks, but it's not connected like this. And you're not drawing things like that. And you're not drawing something that darts to the ground. That's not the algorithm. That's what you've been taught. And the people that are teaching have nothing to do with it. Nothing to do with it. Follow institutions. And again, this is a normal dude. He sent me this email and it changed. He says, this is the first thing in my life that I have seen that is too good to be true. Okay. I mean, I literally, he sent me this. I'm skeptical as all get out. And so I want you to know this is actually one thing in the market that you can use that actually works. Okay. I'm just pulling up my email right now. Look at this right here. Okay. Look at this. So he sent this to me right here. Okay. I try not to show his stuff, but this is real. Okay. This is real from Joseph. Okay. Biggest problem, making $50,000 per month. He was able to convert it to a Roth account. Regular guy, been doing this for years and years and years. And you just lose money. You give up, you make some, you lose some. It's unpredictable. I mean, he's doing $100,000 a month in August here. It's a life change. When you start participating with institutions, this took us 18 months to build his account up to where it could make this production. 18 months. Stop trading Bitcoin and Forex with $100 and start building legacy kind of wealth. Okay. This may not be much for some of you, but you know where he is now? $1 million months, folks. And you think I'm kidding. Here was one day of operating this and using our auction zones just a couple of weeks ago, $88,000 in a day. The numbers are, I talk to so many people, they're talking about $200 a day is their goal. What you can do is so far beyond what you can understand and comprehend, because you just don't understand how big this market is and who moves it and don't know how to participate with them. You can see why people have contracted with us to help them set this up. And if pay does over $16,000 to do it. And we don't do that anymore. But if you've never had success before, if you've gone through every training and every course and everything under the sun, this will work. If you've not had tons of experience, but you've just gotten sick, this will work, because it's not my thing. It is just following, we broke the code, following institutions. So how can I help? For those of you that want to look into this process more and apply it on a deeper level, if it struck a chord with you, and you can see that this framework is a game changer. If you can see that and you want to talk about this more, we've set aside some time, my team and I, to speak with you about it and how you can apply these things to what you're currently doing. What we'll do in this session, we'll talk about any challenge that you're having. We'll paint out where you're at, what's happening, and what your goals are. No matter what you've gone through, my team that I've built a wonderful team. Okay, we've got, our engineers, startup team, PayPal, Google. We've got our statistician is a CEO from a Fortune 500 public company. We've got a wonderful team, and that's really how I was able to put all these things together. So whatever your challenge is, if you want to talk about this further, we've got a couple of openings where you can schedule a session. So here's what will happen on this, and I'll tell you the cost. It's free, hint, okay? But it's not for everybody. What we'll do is we'll craft a step-by-step plan for you using this framework so that you can hit your goals and help you see what needs to happen to hit your income goals, whether that's $10,000 a month or $200,000 a day. I'm telling you, you think I'm kidding, okay? I drive a very modest, 95 Jeep, okay? It's not about the money. It's about having some real freedom. And if you're in the markets, you might as well make it predictable and consistent. Okay, so I told you it's absolutely free. So here's who it's for though. And I ask for you to have integrity before you go book a session, because if you book one and this isn't you, you've taken it from somebody else, because we have limited spots that we can do this. You must have already had some experience. If you're brand new to the market, our experience has been that they're being told that they can take $1,000 and turn it into 5 million in the next 5 weeks. And they have a tendency to not follow rules and processes within this kind of a discipline. You need to learn a little bit more. There's some things that you need to go through. There's free things. 888options.com is from the CBOE. They'll teach you every option strategy you ever need to know under the sun, 100% free. You never need to pay for that kind of training on stocks and options, okay? Or any other indicator for that matter, spread trades, okay? You have to have already gone through some training and are still struggling to find consistent, predictable success. If that's you and you book one of these calls with us, we also ask that you hold yourself to the highest standards of integrity. We don't open this often to have these calls. We operate our fund, and we've got this club at the Super Trade. It's a tight-knit group. It's not, we don't have thousands and thousands, you get it. They come to these websites and they're telling you why they're the best thing since sliced bread, okay? We've got, I think, around 200 group club members in here where they're not institutional trade, they're not accredited, they're not multi-millionaires. There's regular people who need a system that is institutional grade. It's not thousands of people, okay? So if you book one of these calls, please show up for that call. If that's you, go do this now. Okay. I'll put the link in the chat right now. We've got, I think, 6 openings over the next 2 days. Okay. thesupertrader.com/chat. So why are we doing this? Why are we doing this? Well, number one, I hate this industry of teaching people how to trade. You've heard the old notion, if you can't do, teach, right? I found that's really radically true in this education space. Now, don't get me wrong. I think that there are a lot of things that are useful information. You got to learn them. But we thought that they were going to actually give us profits, and we just learned how to structure a spread trade. Or we thought learning how to read candlesticks was actually going to lead to profits, but we just learned how to read candles. Those are all important things, but we were told that this would lead to all the money that we could ever enjoy. Okay. And none of those teachers had anything to do with institutions and following them. It's their own ideas, it's their own concepts, it's their own beast that they've created. And we've been disappointed. Okay. So number one, I like to stick it to this industry and give something that actually works as an institutional level. I know of no other fund that has crossed over into the retail space and has given them access to an institutional grade system. It's not worth their time. Okay. Plus, we know that one day you're going to be an accredited investor, and we'll have that conversation. And that's we're going to be a multi-billion-dollar fund in the next couple of years. Okay, and we'd love to have you be a multimillionaire and you just sit back and enjoy your vacations and traveling and create experiences and sit or whatever you like to do. We'll manage it for you. So, we'll grow to that point. But, we can talk about those things on that call, but I love to give a little bit back and really help people take a quantum leap forward with something that actually works. So if that's you, if you've been doing this, you're still struggling to find consistent, predictable success, again, I've got 6 openings over the next 2 days. Go schedule that right now. Okay. And literally, I think we've probably got almost all of them already booked. Okay. Yep, pretty close. 7 people right now booking. Okay. So go book it. I'll open up 4 more here just because of how big this audience is. Go book it right now. And let's sit down for a chat. Okay, thesupertrader.com/chat. Okay. All right. So I started with Ray Dalio's story. His crash or failure, as he put it, was one of the best things that ever happened to me. I saw that to do exceptionally well, you have to push your limits, and that if you push your limits, you will crash and it will hurt a lot. You will think you have failed, but that won't be true unless you give up. If you're anything like me, you've spent tens of thousands of dollars and feel like a fool because you're really successful in your previous vocation and this just isn't working. Your struggle and your commitment to continuing on will be what allows you to finally get this. If that struggle didn't exist, maybe you wouldn't have shown up tonight. And I don't want to be so assumptive to say that I've given you a golden spoon, but the reality is I do hope that you see and you've had a pretty big aha moment at how insanely predictable the market truly is and what the forces behind them are doing to you and most other people. They're just taking your money and it's just like a little ATM, predictable, consistent, over and over and over again. You can do that and it's not that difficult. So I hope you found value tonight. It's been an honor to spend time with you. Go book that right now. I think, let's see here. Oliver, I've got, I think we've got, holy smokes, we've got 15 more of you on here. Oh man. All right, I'm just gonna open them up all day tomorrow, all day on Friday, and we'll just tell our team, suck it up. And I'll talk to you as well. I'll be on them as well. I'll take ones that my team can't take. So I've opened it up. let's chat, guys. It's been an honor to spend time with you tonight. Yes, let me share those charts. Thank you for reminding me. ABBV. Okay, ABBV is the one that we looked at here. Okay, let me share that chart here with you. This is a Thinkorswim chart. That's ABBV. And we did Boeing, right? You guys want Tesla? And we want Tesla. Okay, here's Tesla, or here's Boeing rather. I mean, just crazy stuff here, man, guys. It just pandemic low right there in our zone, right there in our zone. Pretty crazy stuff. Still blows me away. It's so much fun. All right, Tesla. We do Tesla here. Oh, I typed that in the chat. I didn't mean to do that. I meant to put that in my, now remember, I skipped a layer here. So I've left the measurements on here. So if you have Thinkorswim, you can measure it and complete it. But there's that. You guys, it's been so much fun. Hopefully this has been enlightening. This is a matrix, folks. And we've taken the alternate pill and showed you how deep the rabbit hole goes. And it's true. It is predictable and it is against you. And you are going to keep losing because nobody that teaches you has anything to do with institutions. They're just taking your money. They don't care to talk to you. But this is how it actually works. Look forward to talking to you guys. This is going to be so much fun the next couple of days, getting to know you more and helping you apply these things on a deeper level. Have a great evening. And it's been an honor to spend time with you. We will talk to you later. The person that won the trivia, shoot me an email and tell me your Amazon email address and we'll send you your $100. And you guys have a wonderful night. Talk to you later.